Hey guys, I'm Elizabeth. Today we're with Josh Montgomery from New Paradigm Lending, and we are talking about 5 questions to ask your loan officer before choosing them. Okay Josh, walk me through how you pre-approve a buyer. What do you look for first, and what could slow down that process?
That's a great question, Elizabeth. When we're looking at getting someone pre-approved, we're pretty much looking at 2 things: your income and your assets. How much do you make? How much do you have in the bank? Those 2 things help us kind of determine how much you can afford based off your debt to income ratio and how much you're comfortable with paying to get into the house.
How do you communicate during a transaction, and how often should I expect updates?
If it's something where you're like, I'm ready today, and you're gonna start making offers on homes, then we're probably gonna talk a little bit more consistently. It depends on your situation. If you're like, I'm buying a house a year from now, we're probably gonna touch base every 2 to 3 months, primarily to talk about which house you're putting an offer on, what those monthly payments are going to be, because in reality, every house has a different payment attached to it. Things like HOA, which is homeowners association, insurance, property taxes, all of those things are variable. So we'll probably have conversations every time you're looking at a house. I usually tell people, if you're wanting to know how much a house payment is, just shoot me a text.
What issues do you see most often that derail closings, and how do you prevent them?
There are a couple of things like red flags that can pop up during the underwriting process. In reality, a lot of lenders that you work with are going to actually probably get a lot of that stuff on the front end. So that means if, say, it took you a couple of days to find a house and go under contract, we probably already have most of the documents that we need. However, if it took you a couple of months, or maybe we went through the pre-approval process a couple of different times, maybe we have to update some of those things like your W-2s, your bank statements. Some of those things that can pop up are financial. So let's say that the house that you're trying to buy doesn't appraise or isn't valued as much as what you're trying to purchase it for. Those are the kinds of things that can pop up that cause us to have a conversation about if we need to spend more money or if we need to have a negotiation to lower the price. So there are things that can pop up, but the lenders are going to position you in a way where you're going to know all of that on the front end. It's not going to actually be a surprise. If you've heard horror stories or you've dug through Reddit and you've seen these horror stories, it's usually a lender that did not have a personal relationship with your real estate agent.
Okay, be honest, how many times during a transaction will you tell me, don't touch your credit, and what happens if I don't listen?
Oof. When it comes to credit, this is probably the only transaction and only time in your life where doing absolutely nothing to your credit actually benefits you. And so when you're under contract, we do call for like a hard stop, like don't use your credit card, don't go finance furniture, don't, open up a loan that's going to damage your debt to income ratio. We're going to be able to see towards the end of your closing if you've opened any new lines of credit, and the underwriters are going to ask you if there's anything associated with those. And it can ruin your opportunity to buy a home. I usually tell people for every $100 you have on your liabilities, it's about a $10,000 difference in what you can afford. So that $500 a month car payment makes about a $50,000 dent in what you can afford when you're getting pre-approved. So we do have that conversation a lot. Don't mess with your credit. And the reality is, if you do mess with your credit and you don't listen to us, well then maybe trust an expert next time and do this. Recognize that it will impact you negatively. And so just have those conversations early. That's usually why we tell people you want to get pre-approved, or at least start the conversation sometimes like 10 months in advance, so that we can have those conversations and you have enough time to make a difference.
Okay, last question. It's a weird one.
Okay.
If the loan process was a reality show, what would it be and why?
That's an easy one for me. I would say it's like Vanderpump Rules.
Okay.
So there's a lot of people involved, a lot of moving parts, very different personalities throughout the whole process. I would probably say, if I had to claim myself as somebody, I'm for sure Lisa Vanderpump. If you've never seen the reality TV show, you gotta watch it. She's managing the chaos, and sometimes the calm too. It's a little bit of both. Everyone's different. Every loan, every pre-approval, every home purchase, it's a variable. So there's a lot of things that go into it. A lot of things are different, but we would probably be the people managing that for you. We usually kind of tell our clients that we're kind of like project managers, and we're just making sure everyone else does their job. I would say Vanderpump Rules.
I like it. If this conversation helps you in any way, please like and subscribe to our channel so you don't miss any information that can help you in your journey. Thanks for watching, and we'll see you in the next one.